Hello and welcome to our live session today with Peter. So, a new day, a new week, what's up in the FX market?
Well, it's going to be an interesting opening today as we had a closing on Friday practically with fundamental worries guiding the FX market. I would be noting here that we had from the US worries for a possible recession in the US economy, which was a big issue. Also, there is a wide issue whether the US is going to be defaulting on its debt. And at this point, it would be interesting to note that Biden and Republican Senator McCarthy are going to have new talks practically tomorrow on the issue. For the time being, there seems to be no common ground, so the US is heading towards a possible default. I would be noting also some inflationary pressures in the American economy, which may create some worries for the outlook, especially given the Fed's intentions. Let's not forget here that the Fed practically, implied that it will be pausing its rate hiking path, but also implied that more or less it would be willing to raise the interest rates once again, should it see that inflationary pressures are still high. So overall, we had fundamentals weighing on the market sentiment, providing practically safe haven inflows for the US dollar, which ended the day high against its counterparts. I would be noting though that during today's Asian session, we saw a slight reversal of that market sentiment. It was characteristic how the US dollar corrected lower. So it's going to be an issue in the sense that we're still not so certain whether that's a mere correction lower for the US dollar, and in that case, we may see adverse fundamentals regaining control over its direction and leading it once again during today's American session or not.
Didn't we have also the Turkish elections over the weekend?
Yes, we did. We had the first round of the presidential elections. Now, there were some expectations for President Erdogan to actually win the majority from the first round. That did not happen. He was marginally low, at least that's what's being reported, and he is reported to have gained around 49.3%. So overall, the elections tended to, once again, not allow Erdogan to come into power once again from the first round, but he's actually pretty close. And I think that it will be very hard for the opponent to actually reverse that in the second round. I think it's in 2 weeks' time. At the same time, there's a twist in the whole situation, as on yesterday we had not only the presidential elections, we had also the parliamentary elections. And it's going to be interesting to see whether there has been a shift of power. So we may see on the one hand Erdogan winning the presidential elections, but losing the majority within parliament, and that would be a first for the Turkish political scene. Overall, the uncertainty of the situation and prospect of Erdogan continuing to lead the Turkish state tended to weaken that the Turkish lira hit a new all-time high. We expect the uncertainty and the outlook, the political outlook, to continue to weigh on the TRY. And that would include practically, for example, tensions with the Western allies, unorthodox economic theories. So there is a wide degree of uncertainty, stakes are high, and that tends to weigh on the TRY.
How about US stock markets?
US stock markets ended the day mixed to bearish during Friday's session. I would expect that the fundamentals tended to weigh on US stock markets. We saw a slight reversal during today's Asian session, the pre-market hours. So that's an interesting twist. I would expect fundamentals to continue to lead the way for US stock markets. On the other hand, though, we have to note that we had already most of the high-profile companies releasing the earnings reports. They are already out. But there's still some left during the week. I would be noting mostly the retail sector. And interestingly enough, I would be noting Walmart, Home Depot, and Alibaba. Now, those three are going to be showing us more or less also on a more macroeconomic level the health aspect of the demand side of the US economy. As e-commerce is huge here, and we're getting also Walmart, which is with stores on the ground. And I would be expecting more or less, though, the earnings releases to take a backseat, and most probably fundamentals will be leading the way.
What do we have on today's calendar?
Well, we already had some European releases. I would be noting actually right now we should be getting Eurozone's industrial production growth rate. That would be for March. Should it accelerate, we may see some support for the euro and vice versa. There are worries, by the way, that the production level may contract, and that could weigh on the euro. In the American session, though, I think that would be the most of the interest. We may see some interest around the Canadian dollar. We're getting from Canada the housing starts and the wholesale trade growth rate. And should that be the case, we may see some increased volatility for the CAD. From the US, I would be noting the New York Fed Manufacturing Index. That's for May. Should it rise, we may see the US dollar getting some support. The main release, though, or if you prefer, attention is expected to be mostly on Fed policymakers. We have Atlanta Fed President Bostic. We have Minneapolis Fed President Neil Kashkari, and I would be also noting Richmond Fed President Barkin. Now, the last two, Kashkari and Barkin, are expected to lean more towards the hawkish side. Should that be the case, we may see the USD gaining some support, as that would imply practically that the Fed may be reconsidering the possibility of further rate hikes or not. During tomorrow's Asian session, I would be highlighting practically the Aussie and the Chinese yuan. We have from Australia the release of the economic sentiment for the consumer sentiment for May of Australia. I would also be highlighting, though, the release of RBA's May meeting minutes. And we may see the document actually leaning more towards the hawkish side, which may provide some support for the Aussie. From China, it's an interesting release. We're getting the industrial output growth rate and the retail sales growth rate. So practically, we will be getting from China both indicators about the production side of the Chinese economy, as well as the demand side. And both are expected to accelerate substantially. Should that be the case, we may see the Aussie, definitely the Chinese yuan, but also we may see a side effect on the Aussie, which would be supportive, as that would imply practically that, okay, business is picking up in the Chinese economy, while on the other hand, there is a robust demand side, which could continue supporting the Chinese economy.
How about the rest of the week?
Well, we're having a number of releases. I would be making a start definitely with UK's employment data on Wednesday. Actually, that's on Tuesday, sorry. The highlight, though, of Tuesday is expected to be the US retail sales growth rate. But I would be also highlighting from Canada BOC CPI rates there for April. And should they accelerate, we may see some support for the CAD building up here. On Wednesday, we're getting Japan's GDP rate. It's for Q1. It's the preliminary rate. It's expected to accelerate. If so, JPY may be gaining some support, albeit I would expect JPY to be mostly moved by safe haven inflows. On Thursday, we're getting Japan's trade data. I would be noting, or if you prefer highlighting from Australia, the employment data. Therefore, April, should we see a tight employment market, we may see more or less the Aussie getting some support. And from the US, we're getting the weekly initial jobless claims figure, which, by the way, last week jumped to 264K. That showed some cracks in the tight US employment market. So should the reading jump once again this week, that would enhance market worth for the US employment market further. Lastly, on Friday, I would be noting from New Zealand the trade data. I would be highlighting Japan's CPI rates there for April. And lastly, I would be noting from Canada the retail sales growth rate there for March. Should there be an acceleration, we may see more or less some support building up for the CAD. So overall, we see that the number of high impact releases stemming from the US is to be dropping, and that may force the US dollar to allow other currencies to take the initiative. Should that be the case, I would be highlighting the Aussie, JPY, the Canadian dollar, maybe also a dash of the pound, which, by the way, let's not forget that the UK and Switzerland are about to start negotiations about trading conditions, and that may create some volatility for the pound as well.
Thank you, Peter. Stay tuned for our next live session with Peter.
So welcome to the technical analysis part of the presentation for today. My name is Peter Joseph, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart, and all charts to be presented are to be of the same time frame unless otherwise stated. Now, with no time to waste, we note that there was a clear upward movement of the US dollar over the past 3 days, actually since the 10th of May, to be exact, if I'm correct. Let's verify that, since the 11th of May. It was interesting that we had a correction lower during today's Asian session, yet the upward trend line seems to remain and pushing the dollar higher. Let's reposition the labels for the time being. Okay, I would definitely require a clear-cut break of the R100 and 245 before actually switching it into a support line. But overall, it seems that the bullish tendencies are present. And allow me please to switch to the 1-hour chart. Widen it. It's a beautiful bounce on the upward trend line. Back to the 4-hour chart. Now for the time being, we note A, as long as the price action remains above the upward trend line, we tend to maintain our bullish outlook intact. Now the fact that the price action, that the RSI indicator dropped yet bounced on the reading of 70, it's above it, tends to highlight the bullish sentiment on behalf of the market. Also note how the price action has some substantial distance between itself and the upper Bollinger Band, which may allow it to move decisively higher, creating new peaks. And for a bullish outlook, we would expect the price action to break the 100 and 245 clearly and aim, if not even breach, the 100 and 305 resistance line, the R2. That would be our main scenario for now. However, we see that there seem to be some signs of a stabilization of the price action, in which case we may see the price action of the US dollar index first of all breaking the upward trend line we have just mentioned, in an indication that the upward movement was interrupted, possibly revolving around the R100 2.45 resistance line, or maybe even just below it. And for a bearish outlook, albeit it does not seem to be probable for now, it should be covered. In that case, we would expect a strong downward movement, to break the upward trend line we have just mentioned, but also break the 101.55 support line, an indication that the bears have taken over the pair's direction. Once again, for the time being, the bullish sentiment seems to remain and the upward motion seems to continue, so we maintain our bullish outlook. Moving now to Euro USD. Euro USD, which has escaped its sideways motion, the downward trend line was and remains intact. It actually was intensified a little bit. And the first movement we have to do is definitely reverse the S1 and turn it into a resistance line. Let's go hunting for a new ultimate support level. I note this peak here, sorry. Would be in green, the 1.0305. 030. Yep. Pretty wide distance. And at this point, I would be noting that I feel there seems to be more than one levels here between the S1 and the S3. And in that case, we may see practically that being narrowed as well as this one. Note this level here, which provided support once, twice, and also resistance, while this served also as the lower boundary of the sideways motion. 1.0580 and 1.0425. Let's readjust the chart, widen it. Reposition the labels. Okay, let's correct also the content. Starting with the R3, which is now being placed at 1.221220, sorry. The R2 at 1.1075. The R1 at 1.0925. The S1, which is being placed now at 1.0760. The S2 at 1.0580. And the S3 at 1.0425. Okay, we're a little bit drastic here. Now there was a downward motion. Let me reposition that. And it seems that it has intensified the past 48 hours. Give me a sec. And definitely let's delete the rectangles. Okay, now that's better. Now we tend to maintain a bearish outlook for the pair, and that's being based practically A, on the downward trend line we have just shown, B, on the fact that the RSI indicator, okay, corrected a little bit high but remains close to the reading of 30, and also note how all the moving averages, the 100 in orange, the 50 in green, and the blue 20 moving average, the median of the Bollinger Bands, is also pointing downwards. So practically we have all indications showing for a bearish movement. Should that be the case, we may see the price action dropping, breaking the S1 1.0760, and that may allow it to start aiming for lower grounds. For the time being, the first next stop for the bears is expected to be the 1.0760. On the other hand, though, note that if we drill to the 1 hour chart, that becomes more visible. Note that the pair is still behind the lowest row yet. You can see that we had the 1 row, 2nd row, the 3rd row is here a little bit higher. So if it fails to break below it, that would imply a possible stabilization. And back to the 4 hour chart. And should the pair stabilize, I would expect it to break the downward trend line we have just mentioned and remain in a tight range-bound movement between the R1 and the S1. For a possible bullish outlook, despite that not being probable, but it's still a possibility, yet we would require a break of the upward trend line, downward trend line, but also I would require a break of the R1 1.0925 and a clear-cut move towards the 1.1075. Let's move to GBP USD. Okay, definitely the 1.2540 has been broken and has to be turned into a resistance line. So the first thing we have to do here is to go hunting for a new resistance level, support level. I would be highlighting this row here, and that would be the 1.2010 support line. R2 at 1.2770. R1 at 1.2540. S1 at 1.2350. S2 at 1.2185. S3 at 1.2010. For the time being, there seems to be a downward motion. Let's see if that was interrupted. For the time being, it doesn't seem so. It's borderline. So as long as the downward trend line remains intact, we tend to maintain our bias for the downward movement to be maintained. Once again, I would highlight here some signs of stabilization. It's interesting how the RSI indicator has bounced on the reading of 50 and actually rose. It's now at 39.6. So that may also imply that the bearish sentiment is slowly but steadily fading away, allowing for the price action of cable to remain in a sideways motion. Let's drill for more detail into the 1 hour chart. Allow me please for a minute. Okay, we can see how the downward trend line is based on these lowering peaks. It misses this one out, but it hits on this one again. Okay, let's keep that. Back to the forward chart. Once again, should there be a stabilization of cable and a sideways motion, the first signal that the downward motion was interrupted, I think, would be sent out by the breaking of the downward trend line. While for a possible bullish scenario, I would require the pair to rise, break the downward trend line clearly, but also break clearly the 1.2540 resistance line and start aiming for the 1.2770. That would allow us also to start drawing a clear-cut upward movement. USD JPY in a clear-cut upward trajectory, no questions being asked here. There's no easing of USD strength. On the flip side, JPY is weakened. I would be noting the upward movement with the upward trend line. Here you are. Definitely the R1 has to be reversed and into support line. Let's go hunting for a new ultimate resistance level. Going a little bit higher. It's a beautiful peak here at 1.42420. Readjusting the chart. Okay, let's reposition these. Starting with the S3, which is now being placed at 130.40. The S2 at 133.55. The S1 at 135.40. Let's lock these in and go for the R1 at 137.75. The R2 at 139.40. And the R3 at 142.20. Lock also these in. You know something? I'm a little bit curious here about the R2 and 139.40. I would like to have a second look where exactly this resistance line rests. Okay, that's clear cut for the R1. Okay. Another indication for the R1. Oh, here it is. Okay. So practically what we did was mark these peaks here, but also these truths. Okay, it seems to be valid. I'm keeping that. It's interesting always to have a second refresher just to be also on a psychological level more reassured that the levels you have set are valid. Say for example, the support lines are obvious. Say you can see how the S1 rests as a peak here. Used to be a former resistance line, now turns into support line given that the price action has broken above it. Also note how the S2 rests on these truths here, but also on these peaks. While the S3 here and here, and was broken okay briefly here, but overall it held. So for the time being, we tend to maintain a bullish outlook for USD JPY. Note that the RSI indicator has been rising, aiming for the reading of 70, actually pretty much near it. So that tends to imply a more or less bullish movement or sentiment on behalf of the market for the pair. As long as the pair remains above the upward trend line, we tend to maintain our bullish outlook intact. On the other hand, though, once again, the RSI indicator is nearing the reading of 70, implying that Okay, there is a bullish sentiment in the market, yet the pair is nearing overbought levels, and that may make it ripe for correction lower. It's characteristic that the pair's price action is flirting with the upper Bollinger Band in blue here. So that's another interesting element which may slow down the bulls somewhat. Overall, though, once again, bullish sentiment expected to be maintained as long as the price action remains above the upward trend line. Now, should there be a stabilization, I would expect the price action, okay, definitely to correct a little bit lower, break the upward trend line we have just mentioned, yet to respect the S135.40, that would imply a movement like this. For a bearish outlook, I would require the pair to drop, break the upward trend line, once again signaling an interruption of the upward movement. But at this point, I would like it also to break the S135.40 clearly and start aiming for the 133.55, which would allow us practically to start drawing a downward trend line, showing us the limitations of the downward movement. Okay, that was interesting. Let's have a look now at USD CHF. Okay, definitely we have to reposition these. And definitely the R1 has to be switched into support line given that it has been broken to the upside. Definitely. Green. Now let's go hunting for a new ultimate resistance line. These peaks here showing us the limitations of the sideways motion. Let me delete the rectangles. There we go. So these limitations of the sideways motion to the upside show us practically or indicate that there is a resistance line here. Let's color this in red. And that would be the 92.20, 0.9220. Lock it in, widen the charts a little bit. Let's reposition the labels as well. Let's correct also the contents. Starting with the S3, which is now being placed at 0.8760. The S2, which is being placed at 0.8860. The S1, which is being placed at 0.8930. Sorry, 8935. Let's correct this a little bit further. We also added a plus sign here. The R1, which is being placed at 0.9020. The R2 at 0.9115. And the R3 at 0.9220. Locking everything in, let's talk direction. Here we have a nice upward movement of USD CHF, which cannot be neglected. And let's draw it with an upward trend line, like this. You can see that it intensified over the past 24 hours as it broke decisively the 0.8935. Now, despite the correction lower, we tend to maintain our bullish outlook. And in that case, we may see the price action rising, breaking the R1 0.9020 and having a peak above it or at it. Mind you that as long as the upward trend line remains intact, we maintain our bullish outlook. On the other hand, should there be a stabilization of the pair, I wouldn't be surprised to see it correcting lower, breaking the upward trend line, remaining in a sideways motion above the S1 0.8935. For a bearish outlook, we would require the pair to drop, break the upward trend line, once again signaling the end of the upward motion, but also break the S1 0.8935 and start aiming for the 0.8860. Let's move to the Aussie commodity currency pair AUD/USD. We're adjusting the chart. Okay, the S1 was broken to the downside in red. Let's go hunting for a new ultimate support line. Okay, we see that we have two levels here. The one is this one, and that is this one. I'm going to be breaking it and adopting the 0.6365 as a new support level. Let's readjust the chart. Let's reposition the labels. Let's correct the contents as well. Starting with the R3, which is now being placed at 0.6920. The R2 at 0.68. The R1 at 0.6690. The S1 at 0.6580. The S2 at 0.6450. The S3 at 0.6365. Let me reaffirm the last one. Yep. Let's lock everything in before we start talking direction. Now, the first thing we notice is that AUD/USD had a clear-cut downward motion, which seemed to be interrupted, and it was, during today's late Asian, early European session. Also note how the pair hit on the R1 0.6690 and corrected a little bit lower, which more or less tended to imply that there seemed to be some respect for the level. Once again, I would be noting here the RSI indicator, which has risen from the reading of 30. Actually, it bounced on it and has reached now the level of 43.5.6, implying that the bearish sentiment is fading away, but the market, on the other hand, has not still just decided for the bulls. It's, in my opinion, more over a sideways motion continuance. So for the time being, we tend to maintain a bias for the sideways motion to continue between, actually just below the R1, 0.6690. It's interesting to note that the past price action has noted this mid-level here. We had 1, 2 throws, one again. It's quite interesting. So I wouldn't be surprised to see the price action maintaining that course. On the other hand, should we see the bulls taking slowly but steadily over, then I would expect the price action to rise above the R1 0.6690, turning it into support in a clear-cut upward movement and start aiming for the 0.68 resistance line. On the other hand, should the bears take over, I would expect the price action to drop, break the mid-level, break also though the S1. I would require a lower throw than this one. So the S1 0.6580 has to be broken, in my opinion, for the bearish outlook to come into effect. Okay, let's have a look for USD CAD. In an interesting movement, the CAD on the one hand has clearly broken the R1 1.34. That should be no question. So we have to turn this into a support line. Briefly also broke the 1.3545, which tended to imply some bullish tendencies, but it corrected lower. Let's go hunting for a new ultimate resistance line for the time being, and we're definitely going to be highlighting these peaks here. It was a clear-cut sideways motion with the upper boundary somewhere here. You can see it even from the yellow rectangle, which we had highlighted earlier. Sorry. Let's color this into red, and that would be the 1.3805. Let's widen the chart, reposition the labels. Start with the S3, which is now being placed at 1.3145. The S2, which is being placed at 1.3270. The S1 at 1.34. The R1 at 1.3545. The R2 at 1.3665. And the R3 at 1.3805. Okay, we have our support and resistance levels ready and set. Everything's locked in. Let's talk direction. Now there was a clear-cut upward movement similar to the Aussie, only in the reverse. And know how that has been broken during today's early European session. So for the time being, given also that the RSI indicator retreated from the highs of 71 and is currently at 59.6, we tend to maintain a bias for the sideways motion to be maintained, or at least the bullish sentiment seems to have faded away somewhat, or is fading away. Should there be a stabilization of the pair as expected, I would be surprised to see it moving in a sideways motion below the R1 1.3545. For a bearish outlook, we would require the pair to drop, break the 1.34, and that would allow it to start aiming for the 1.3270. But definitely, I wouldn't expect it to reach the S2, but I would require it to clearly break the S1 for a bearish outlook. For a bullish outlook, I would expect the pair to rise, break the R1 1.3545, and start aiming for the 1.3665, maybe even reached. Let's have a quick glance also on gold. Gold, which has broken below the 2020 psychological barrier, which more or less now serves as a resistance line. Let's switch that. Let's go hunting for a new ultimate support line. And I would be placing it on this choice here. That would be in green, the 1945. Let's correct the labels as well. So for the time being, regarding direction, we see the case for gold to be moving in a sideways motion just below the SR1 1020. Let me correct the labels first. 2078, the all-time high, being our new ultimate resistance line. 2055, the second, and the first resistance line being now placed at 2020. The S1 being placed at 1990. The S2 at 1970. And the last one at 1945. Sideways motion expected for the precious metal, given possibly below the R1 2020, yet respecting that level, maybe even testing it, but over respecting. Also, there is indicators pretty close to the reading of 50. It's at 46, just below it, implying a rather indecisive market, which could allow the sideways motion to continue. So that should sum it up from all of us here at IronFX. Best wishes for solid trading.
All right. Okay, let's give it a moment for the others to join first before we begin. Let's wait for others to join first. Okay, let's give it a minute. All right, guys, let's give it a minute while we wait for the others to join first before we begin. Okay, just doing a mic test and video test. Can you guys hear me and see me? Because I'm actually using a new setup from home. It's a video setup, it's a new microphone setup. So just wondering if you guys can hear me. Hey, hi there, Amit. Hi there, Steph. Okay, just letting you guys know in case you guys, want to contact me after while we are waiting for the others to join. Okay, let me get this up. Okay, in case you want to contact me after this webinar, want to message me, you guys have any more questions, you can actually contact me via this link. I'll just send it to the chat. You guys can check it out. I've just sent the link to the chat already. Can open it up, take a look at it, and also that's about me. Okay, so also just want to let you guys know there's actually, if you guys want to find out more about webinars like this, you can head on to IronFX website, and then you can head on to Forex webinars. So it's under IronFX School, under webinars. Okay, so you guys can actually scroll down, can actually register for the education. Okay, not sure why my face isn't up here yet. Okay, yeah, my face is not up here yet. Well, it's fine. Okay, next. So we actually have the IronFX VIP room. So please join the room. So I actually will send the link to the chat. You guys can actually deposit money. So once you guys deposit money into the accounts, you guys can actually have free premium services. So for bronze, deposit at least $250, silver at least $1,000, and gold at least $2,000, and you can ask for analysis requests from us. From us, prop traders, indicator requests from us, platinum at least $5,000, diamond at least $15,000. So yeah, just head on here to register this website and then log into client portal, select VIP room, make sure your balance meets the minimum required. So in the room, you can actually have a one-on-one session with us, Jean, this entire group of us. You can talk to Cassandra, Desmond, Jean, Annabelle, Jianing, and myself. You guys can ask us questions directly there. So we are always there on the channel from Monday to Friday. All right. Okay, let me just close it out. Okay. Topic for today will be on the Fibonacci series, 2 out of 4 Fibonacci extensions. Okay. So let me just begin this slideshow. Okay, my name is actually Chen Yongxing. I'm actually the trade analyst for Everest Fortune Group. Hey, hi there, Charles. Just saw you coming in. So I'm actually the trade analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a very, very special collaboration with IronFX, where we are bringing you guys the good stuff, teaching you guys the education that you guys need for your trading needs. So a few topics just to cover for today. We'll be going through the ideal market structure, different Fib retracement levels, Fibonacci extensions. We'll be focusing more on that today. Fibonacci extension, which are Fib levels that are above 100%, which are the Fibonacci extensions. And how do we combine Fibonacci retracements for our trading? Hey, hi there, Fo. Hi there. Okay, so first topic we are going through is the ideal market structure. So in ideal market structure, you guys can actually look at this chart first. You can actually look at this animation first. This is actually a wrong way of drawing a Fibonacci line. So let me just go to the chart to show you guys. Okay, maybe I'll just use the euro-dollar chart on the 1 hour charts. Okay, I'll just clear things out. Okay, so this is actually very, very insignificant. This is actually not clean. The way you're drawing a Fibonacci line, you can actually find the Fibonacci from the top left-hand corner, 1, 2, 3. So it's called the Fib retracement. You actually scroll down, it's called the Fib retracement is the first option. So a Fib retracement, you want something that's very, very clean, where you want to draw it cleanly. So you draw from the top, bottom to the top. So you want to have a significant swing to the highest points. So what is going on? You want the trend line. You can actually see this dotted trend line. It has to be relatively close together along the Fibonacci trend line. Then it's a clean and valid trend line. But what is not valid? If you actually draw a Fibonacci line like that, so let's say I draw it like that, because as you, okay, I'm not sure why this keep disconnecting. Okay, so if you actually draw from the bottom to the top, but then you notice that the Fibonacci actually deviates very, very far away from this trend line right here. This trend line to the top, it deviates quite far away before it still deviates quite far away. It's not even close to the Fibonacci line before it continues heading up. So this is actually not a clean setup. This is not the way you should be drawing. So what you should be doing is, if you actually draw a Fib from the bottom to the top, this is one single. You can actually treat this as a one single Fibonacci drawing, because price went up, respecting that trend line, came back down, tapped within the 78.6% Fibonacci line before price continues moving upwards. So I'm just showing you guys the difference between drawing a clean and unclean Fibonacci points. So next, using a Fibonacci swings the right way. So please take a look at this short little clip. So the swing highs and lows need to be very, very significant before you can start drawing your Fibonacci line. So, so another reason for using the Fibonacci line is because many algorithms actually use Fibonacci for their trading. So it's actually robots, expert indicators. They rely a lot on the Fibonacci line to actually trade. So you can actually expect. So let me just show you guys an example. You guys can actually expect the, okay, maybe I should draw from here to here, because this is a significant swing low to the significant swing high. You'll notice that algorithms, or should I say the 61.8% golden Fibonacci line, usually price comes back down and reacts off very, very strongly on it. You can actually take the 61.8% Fibonacci line as a potential take profit area. Potential take profit area, or if you are looking for longs. So let's say looking at this overall time frame, it's very, very bullish. Price just continue going up. What you can do is you can wait for price to tap into the 61.8% Fibonacci retracement line before you move down. Zoom in at this area to the 5 minutes, 15 minutes, or even the 1 minute time frame for your entries. So potential better entries right there. So that's how you can pull Fibonacci in within your trading. So next, moving on to following the market structure. So we got to follow the market structure. Just like I showed you guys, the trend line cannot cut through the Fibonacci trend line. So you take a look at this video, price actually cut through it. So it's not clean and it's the wrong way of drawing. So let's watch it one more time before I show you guys an example. Okay, done. Okay, let's take a look. Let me find one more that it's not valid. So maybe move on to the 15 minutes time frame. So let's see. Okay, let me find one. Okay, let's say if you actually want to draw a Fibonacci line from this significant swing high to this significant swing low. If you actually draw the Fib from the top to the bottom, is this valid? Well, to answer your question, it's not a valid trend line, because like the video, like the example that I just showed you just now, price actually went through and cuts through the entire Fibonacci trend line before it moves down towards the significant swing low. So this is not a valid, it's not a valid way, and it's a totally wrong way of drawing your Fibonacci line. So what you want to actually do is you can actually draw the Fibonacci line from here, the top to the bottom. So you notice that price actually comes down to this from the top to the bottoms and then continues. Moving back up, retraces back up to the 78.6% Fibonacci line before it continues back down. So just for display purposes, just to show you guys cleanly, I'll just edit this to 78.6%. So notice price just went down, went up, tapping that area. So this is considered one Fibonacci movement. So you can start to draw the next one. Price goes down to the significant swing low. So there's another way you can draw it. So price continues going down. Okay, not sure why it keeps disconnecting. Okay. All Fibs. Okay. Next, let me find another one. Let me get back to the question. Following the market structure, I've shown you guys a clean one already. I'll just disconnect that. Let me find a clean market structure for you guys to follow. Want something that's very clean. So maybe I can follow this. This might be pretty clean. It's not that clean. It actually deviates quite far, quite a bit far away. So it actually went up. So this is not clean. I wouldn't take it as a clean trend line, as a clean Fibonacci drawing. So let me find another one. So this is actually very, very clean. If you draw from the top to the bottom, you notice that price is more or less very, very close along the Fibonacci trend line. So please screenshot this down, this setting right here. This is my personal settings. This is the Fibonacci settings. So it's when I double click it, it's under style. Please take photo of it. You guys can actually copy it out. These are the settings that I'm actually using for trading. All right. So once you guys have taken photo of this, let me move down. So these are the next settings that I'm actually currently using. Same thing, please screenshot this down and apply it to your trading view. Oh yes, by the way, talking about trading view, let me get this thing out. Okay. So if you guys actually want to, sign up for TradingView, want to upgrade to the premium account or even the pro accounts. So I'm not a spokesperson for TradingView, but I actually find that using the premium, the upgraded TradingView plans, especially the pro plans, which I'm personally using on my personal TradingView accounts. What I like is I can actually use more than 2 indicators. So on pro accounts, you can actually use 5 indicators, 2 charts in one layout, 20 active server-side alerts, which are very, very important to me. Because using the alerts, I can actually not monitor my chart so often. I set an alert, I go and relax, I come back only when price hits my points of interest. And most importantly, it's actually ad-free. So you actually won't see all the advertisements popping up. So I just send the link to the chat. You guys can actually use my referral link to sign up. All right, let us continue. So back to the topic on Fibonacci series. So next, the different Fibonacci retracement levels. Okay. So yeah, by the way, if you guys have any questions so far, feel free to ask in the chat. I will try my very best to answer you. So if I'm going too fast or if I'm going too slow, if there are any things that you guys do not understand, do let me know. Also, please try to implement the Fibonacci, using the Fibonacci retracements for your trading. It actually helped me a lot. Last time I did not use Fibonacci retracement for my trading. I did not know where price can potentially head to. I did not understand the concept of Fibonacci lines. So just now, as I mentioned, drawing from the significance, swing low to the swing high, you actually notice that price actually came back down to the 61.8%. So if you are looking for sales, let's say you are selling, you can actually take profit at this area just in case price bounces all the way back up to your entry. So use that as a potential target point. Hey, hi there, Charles. Hi there, Phoebe. Hi there, Francis. Hi there, Jana. So you guys coming in. All right, next, just having a quick look. Let me find another clean Fibonacci line setup. So this is actually quite clean. Quite clean. Price actually follows accordingly along the trend line, moving upwards. So that's another way that you can actually draw it. So let me find the 127.2%. Okay, so later we'll get right into that. Hey, hi there. Hello, man. Hello. So today we'll be talking about just a quick recap for those who are new here, who just came in. I'm actually going to talk a lot about the Fibonacci extension lines today and how you can implement it into your trading. So it's numbers above the 100% fit, which is the 127.2% and the 161.8% Fibonacci line. Wait, let me get this out. We are mainly focused on this 127.2% and 161.8%. Okay, next, moving on. Ideal market structure, I'll show you guys already. Fibonacci extension. Okay, we'll not be going through that because I'm sure many of you guys are new traders. So if I actually show you guys the Nike tick today, it might actually confuse you guys. So there's actually a trading method called the Nike tick. So you can actually take a look. Price. Okay, take a look at this video again. So this is why it's called the Nike tick. It looks like a tick. Draw from the starting points to the end points. And you watch out for the 127.2% area and the 161.8% area. So price actually taps into that area and reverses back down towards the previous overlap support. So that could be a potential trade setup you can actually take a look at. I'll show you guys an example. Hopefully I can find an example. So let's see. So we actually currently we are looking at the 127.2%. You actually notice that price actually reversed back up. So right now we actually want to look for a potential setup that we can take. So if we actually use a Fibonacci projection line, I'll just show you guys today just an example. I'll not expect you guys to understand or use this method by the end of this session. But actually, you can actually use the Fibonacci extension line. Let me find it. Trend-based Fib extension. It's 1, 2, 3. Trend-based Fib extension from the top to bottom and to the next swing. So you are swinging from here, here, and here. So that's how you draw it. You notice that the 78.6% Fibonacci projection line and the 127.2% Fibonacci projection line are kind of intersecting together. You can actually draw a box. Take a look very, very nicely. So in order not to miss your entry, you can actually have a 1 pip entry above. So instead of 1.08344, you enter at 1.08354. So it looks more or less like a sniper entry. 354. You snipe your entry, stop loss at the. Let me get this out. 127.138. Okay. Let me clear it out. Make it clean for you guys. Stop loss below the 141.4% Fibonacci line, and then you aim for price to hit back up towards the previous overlap resistance. Let me get this line out. Resistance line only. Notice that price actually, if we move on to the smaller time frame, price actually went very, very nicely, tapped into our entry, and reversed back up immediately. So this is actually a 1-to-1 setup, a 1-to-1 trading setup that you guys can actually take a look at. So yeah, very, very nicely 1-to-1 trading setup right there. So I'll just screenshot this down and send it to chat so you guys can take a look at it. The 1-to-1 setup right there. Copy link to the chart image, I'll send it to the chat. So that's an example of a reverse Nike tick. So let me show you guys another Nike tick. Instead of buying, you guys will be selling back down. So let me try to find an example for that. Right, give me a moment. Let me find it. So this is quite a clean setup. It didn't hit. It's nowhere close towards the 127.2. I'm looking for price to be potentially close to that. So let me find a setup for it. Okay, potentially we can take a look at it. Look at this. Okay, this might be a setup. Okay, off it. It is not clean, it's nowhere close. Well, let me find another one. So this setup is actually quite rare, especially on the larger time frame. So it might actually take some time to find it. Let me find it again. Okay, so if price actually, so reverse Nike tick. Price coming back down. Okay, this is quite a nice setup. This is a reverse Nike tick. Price actually hit up and reverse back down. So let me show you guys how I found it. So if you actually draw a Fibonacci projection line from the bottom of the swing low to the top and back down to that, so you can actually see 1, 2, 3. So it's pretty much quite a nice Nike tick right there. So we are looking at the 78.6% Fibonacci line. So I'll just draw that area out. Next, you can actually draw a Fibonacci line, Fibonacci retracement line from the top to the bottom. You notice that the 78.6%, I'll just highlight it out for you guys. So you notice that the 78.6% Fibonacci projection line and the 127.2% Fibonacci extension line are intersecting with each other. So you can actually take a short position right there. Take a short, your take profit will be at the previous swing high right there. So it actually turned into a support level. So that could be a potential trade that you can actually take a look. So for the stop loss instead, actually I noticed that the 141.4% has been hit. You actually notice that your stop loss would have been hit. But actually, if you play around actually through some back tests, we actually notice that the Nike tick setup also works if you set your stop loss to the 148%. 148%. Slightly higher, 148%. It's still a more than 1-to-1 risk to reward trade. So it's actually a 1.32 risk to reward trade. You can actually type it a safer entry, 148% stop loss, where you set your stop loss. So that could be a trade setup. So let me just screenshot it down for you guys to take a look. Copy link chart image. You can take your time to actually look at the forex charts, your market, find potential setups. Okay, next. Nike tick setup, you actually notice starting points, reversal. So this is actually a way of reversal trading. Okay, combining Fib extensions with retracement. Just now I showed you guys already. The Fibonacci lines are intersecting together. That is why we have added confluence to. That's why we have increased confidence for the trade setup right there. Okay, so let me show you guys how I personally trade. I actually use Fibonacci lines a lot for my trading. So if you actually take a look right here, let me find a trade setup. Okay, let me find a potential trade setup. So 61.8%. I always wait for price to retrace back down towards the 61.8% area before I move towards the 1 minute time frame and search for potential entries. So for me, I actually use smart money concepts. I use that a lot for my trading. So the way I actually look at the trade setup is price goes down, hits back up, goes down, goes up, goes down, hits down before it breaks structure before moving higher and higher. So you notice that where is the market structure shift? How it works is a market structure shift is when price forms a higher high before moving higher and higher. So this is our market structure shift right there. You notice that price actually broke the high before, retracing back down and moving higher. So this is my 61.8% points of interest. So let's take it as this, my 61.8% POI. This is how I wait for my trade to happen. So in this particular scenario, it's the same thing also. The 61.8% Fibonacci retracement line is right there. So what I do is I wait for price to head back down before we have a market structure shift right here. You notice that price actually broke this high right there. Okay, let me find this. Okay. Price broke structure. I'll just write this out as simply as possible. Price actually broke structure right there before we. Okay, let me put this down. Let me just redraw it out how I look at it. Okay, so it's the same thing, price book structure. So you can actually start to look for a retracement by entry. So the moment price break structure, my first entry can potentially be either so in the 1 minute time frame, this is the previous significant swing low. So I'll draw it all the way up to the high where the high was. So if you notice that price taps into I'm always looking for the 38% area for my entry or the 61.8% area for my entry. So in this particular scenario, price actually came down very, very close towards the 38.2% and Fibonacci retracement, but actually did not activate. So as price continues moving higher, I'll continue moving my Fibonacci line higher and higher, and then potentially I can enter my trade at the 38.2% area. Price actually came up, went back down towards my 38.2% area. That is where my entry would have been. So just let me draw it out. Have an entry right here, 38.2%. Stop loss right below, all the way down to that previous swing low. And then I aim all the way up to the next point of interest, all the way up in the charts. But the issue with this, how can I refine my entry? So although I say that 38.2% would be a potential entry, so it would be a hit or miss entry. My better entry I would like is preferably the 61.8%, but apparently price did not retrace back down towards that area. So usually what I'll look for is at least the 50% area. Why the 50% area? Because 50% retracements is usually the discounted zone. So you take it as above here. Anything above right here, if you are buying, it's the premium zone. Anything below that, it's the discounted zone. So we always want discounts, especially when we are buying things in real life. So this could be a potential buy entry right there. Buy entry, continue, waiting for price to continue moving up. So it also looks like a sniper entry right there. Stop loss below, so you would have reduced your risk by roughly an estimated, okay, in this particular case, reduced by about 8 pips. Not the best, but it's better, right? Okay, so let me just move on. Okay, I'll just screenshot this down and I'll send it to the chat. So this is how I personally trade for my trading setups. I'll label it out how I personally trade. Okay. So a potential take profit target, this is where we will be using the Fibonacci extension lines. So anything above 0% is actually Anything above 0% is actually the minus 0.272 and minus 61.8% Fibonacci line. So these are called expansions, which are negative. So let's see, in this particular scenario, we can actually use it as potential take profit targets. Okay, let me turn on the lights. I think it's getting a bit dark. Okay. So with our first take profit target, okay, let me clear this out, 5 minutes. Okay. We can actually aim for the negative 27.2% Fibonacci line for our first take profit target, which also is in line with the previous swing high. So it coordinates very, very nicely. We are adding confluence to why we are taking profit right there. So you can either take partial profit right there, and then your final take profit can potentially be at the negative 61.8% Fibonacci line. Final take profits. So at the partial, when you take partial profits, you can close. So this is just a suggestion. This is not a trade advice. Potentially close. So I write potentially close 80% of your trade, and you leave the rest to run. So the final take profit is the remaining 20% of whatever you didn't close. So this is how you can personally manage your trade just by using the Fibonacci expansions and extensions. So I'll just delete all this out. All right. Okay, I'll screenshot this down. I'll send it to chat. So I'll label it as how you can use Fibonacci expansion lines for potential take profit targets. Okay. Next. Let me find another setup where I can make use of the Fibonacci extension or expansion lines. Okay, well, maybe in this particular setup, okay, it's not the best setup because I do not like this so-called support. Okay, so since you guys are actually using classic support and resistance, most traders are, I'll just use it then. So maybe we can actually take this area as a potential. Okay, let me just draw it out, maybe on the 1 minute time frame. Okay, I do apologize if I'm dragging the screen a bit too much. Okay. So let's draw our first support area first. So we have a very, very nice support drawn out. Very, very nice. Price draws in. We are drawing the best fit lines. So we actually have 3 tabs. Pretty much this is a valid support area. So very, very nice support. Price came down, tapped right into that again. So what I'm looking for, same thing. I'm looking for a market structure shift. So even a minor high. So let's say price goes down, even a minor high like this gets broken. I also take that into account. I'll point out this how I take a look at it. So this is also a when price broke structure right there. So once price broke structure, I'll start looking for, as I mentioned, either the 38.2% or the 50% Fibonacci retracements. So I'll draw from the bottom to the top. So in this particular scenario, price actually tapped into the 38.2%. So why I usually talk about 38.2%? Because it's nearly an unmissable area. You nearly can't miss the trade if you actually enter at the 38.2%. So with our entry in place at the 38.2%, stop loss below the previous significant swing low, you start to aim for the, okay, let me just screenshot first before we continue. This another setup. Okay, I'll screenshot this down, send it to chat first. Okay, I'll show you guys how to use the expansion. So it's the negative 27.2% and the negative 61.8%. So you can actually notice that let's see whether the 61.8% target has been hit. Okay, price actually tapped very, very nicely before it reversed back down. So same thing. Let me get the lines out. Do I have the lines? No. Okay, never mind. Same thing. This could be your potential first take profit target, first TP target. Next, it's your final take profit target. So I'll set this as the final TP target. You notice price taps very, very nicely into the negative 61.8% before it automatically reverses all the way back down. So yeah, I'll just screenshot this down and I'll send it to chat. So for this particular trade setup, it's actually a 1 to 1.61 risk to reward. So I'll copy it into a chart image, I'll send it to you guys. So this another how you can use another example. I'll just type it out. Another example of implementing negative 61.8% Fibonacci expansion. So I'll just bold this word expansion line. Hey, no problem, man. Juha Vro Kiwi. So you actually scroll through the chats. I actually have sent a few setups, just how to use the Fibonacci lines, Fibonacci expansion, Fibonacci extensions. Hey, no problem, man. Okay. So next, let me take a look at another trade setup. So we have to go through a very, very intensive practice session. So you guys can more or less see how to use it properly. So same thing as I drawn, price is very, very close within the Fibonacci trend line. All right, next let's find another setup. So I'll just find another trade setup where we can aim for. Okay. All right, it's quite a nice one. In this particular scenario, price actually went up. We actually have quite a nice resistance right here. Quite a nice resistance. So I'm actually drawing the best fit line. So maybe this is not the best, but yeah, best fit resistance. Extended box rate. This is not the best resistance line, but more or less you guys get it. Price tap, failed to break before, continue going back down. So let's see how we could have potentially entered this nice setup and potentially look for take profit targets. So same thing, I'm looking for a market structure shift. Even a very, very minor one means a lot. Okay, let me take a look. Price actually swung significantly to a top before it broke structure right there. So we actually have a market structure shift right there. So even on the 1 minute time frame, this one is quite a significant structure. It takes quite a bit of practice before you can start to spot all these kind of structures taking place. Okay, let's move on. Okay, let me just draw it out nicely, very, very clear for you guys to see. So this is how I actually see it. Okay, let me find a nice place to put it. All right. So same thing, we have a market structure shift here. So I'll just put an X right there, bottom right, make it bold. So you guys can actually see it very, very clearly. Same thing, I'm looking for the 38.2% retracement. So I'll be drawing the Fibonacci line from the top to the bottom swing low. So I'll be drawing every time price, every time price increases, I'll just be adding my entry right there. So notice the 38.2% area, that would be my entry. So I'll be entering right there. So the moment price steps in, stop loss above at the previous swing high. Take profit target, your first take profit target can be the negative 27.2% Fibonacci line. Same thing, this is your first take profit target. Your next take profit target is the negative 61.8% Fibonacci line. This is the negative, this is the final TP target that you guys can take a look at. Okay, so I'll just screenshot this down and send it to the chat. Okay, maybe I should label this out. This is a very, very nice classic resistance area. Okay, I'll just screenshot this down. Okay, I'll just screenshot this down nicely and send it to the chat. So this is another example on the use of Fibonacci expansion lines for your take profit targets. All right, any questions so far? Feel free to let me know. So I'm always aiming for the 38.2%. Any questions, just let me know in the chat. I'll slow down. If you guys have any questions, just let me know. Okay, let me take a look at this setup right there. Okay. Let me find another setup. So I haven't found an extension setup yet. Let me find it. Okay, so we actually have an extension setup. Let me find it. Okay, let's move back. Let me just move back to that setup. Just now I had it right there. Okay, where is that setup? Okay, it's okay. Okay, just now I show you guys this setup. I already showed you guys just now. So we had a market structure shift here. Price actually entered with an X right there. Price came back down, tapping into the 38.2% area. But I told you guys you can expand your entry to 50% area. So how do we use the extension, Fibonacci extension line now? Can actually draw the Fib from the bottom of the swing low to the next high. Draw it out. Hey, wait, my bad. Draw it out from here to here, the top to the bottom, where price last hits, and then you start to draw the 127 and 161.8% area. So these plus sides are actually the positive numbers are actually the Fibonacci extension areas. So if we actually add, so maybe you can add some confluence, negative 27.2 and negative 61.8. Okay, these are quite far apart. Well, you can actually use the extensions for your take profit targets also. So if you actually found another long entry, let's say you found another long entry, let me find one. Price goes down, retraces back into the 61.8%. So let's say you actually caught some kind of entry. So this is an unrealistic setup right there. So let's say you actually caught an entry right here, 61.8%, stop loss below, can aim for the 127.2% Fibonacci extension line, or the 161.8% Fibonacci extension line. Okay, I'll just screenshot this down and I'll send it to the chat. Copy link to chart image, send it over. So yeah, any questions so far? I think you guys have no questions. You guys have no questions. You guys are just understanding, watching, slowly understanding what is going on. All right. So let me find the Linktree link. Linktree.me/. So you guys want to contact me. You guys want to let me find it. It is actually my personal account. You guys can actually follow me. This is my personal Instagram account. You guys can follow me. My account is not private. Feel free to follow me and ask me, talk to me there if you guys want to. So you guys can find out more about me via this Linktree. So I'll send the link over to the chat. You guys can click on it. It will expand out. It's like my portfolio easily it's like my portfolio, label it out nicely for you guys to take a look. All right. So far, any questions before I end this webinar? Just let me know. So I know this might not be the easiest of topics, especially for beginners. Many traders actually did not use the Fibonacci lines when they start trading. So please do not make the same mistake. So let me just take a look at EU. So I'm honestly looking to, just sharing a bit, I'm actually looking to continue selling EU, possibly selling EU just because there's this nice little support area that I'm looking for price to head towards. So it's actually a nice area on the 1 hour chart that I'm looking for price to hit. So you actually notice that there's a trend line. So we actually have 1 tap, 2 taps, 3 taps, 4 taps, 5 taps. So if price actually manages to come back down towards this area, I'm looking for retest before price hits back down. So this could be a potential setup that I'm actually looking at currently for euro dollar. Potential trade setup for euro USD. Okay. So currently, if there are no further questions, I'll be ending this webinar for today. So yeah, thank you guys for joining. Appreciate it. I'll see you guys in the next webinar. So yeah, thank you Phoebe, thank you Jana, thank you Joha, thank you OK Chuk-U, thank you Samuel Julian, thank you Tivin. So yeah, thank you everyone for joining. Feel free to talk to me within the the VIP trading room. Just ask me any questions there. Let me know. Hey, no problem, no problem. See you guys again. Hey, bye Jana, bye Tivin, bye Joha. Bye guys, take care. Safe trading. All right. Hey, bye guys, bye guys. I'll just end it.
Today, we will look at debt-based investments and their difference from stocks. While as a trader, you can trade stocks via CFDs without actually owning the underlying instrument, an investor will invest in the actual stock and own it. Most investors focus on investments that aim to increase wealth and to help them reach their financial goals like a comfortable retirement or the ability to pay for their children's education. When investors buy stocks, they purchase assets whose value is expected to increase and provide a nice return when sold. Investing in stocks also allows the owner to access a portion of the company's profits through dividends, share buybacks, or reinvestment, which helps to grow the company's and the stock's value. The stock market offers volatile returns over short periods of time, such as 5 years or less, but higher returns over decades, long time periods. Debt investment can be government, corporate and municipal bonds, as well as real estate investments, peer-to-peer lending and personal loans such as mortgages. With a debt-based investment, you do not own an asset or a company, but instead you lend money to an individual, corporation or government in exchange for a fixed income in return. Such investments typically offer a lower return than stocks, but are considered to be more consistent. There is some risk involved, as you might not be able to receive the funds you have loaned, and it's so important to choose your investments wisely. While they might be less risky and volatile than equity investments, they offer lower returns. The bond and mortgage market has fewer price changes than stocks. Equity investments, such as stocks, are securities that allow investors to have a claim on the earnings and assets of the corporation. Common stock trader on popular stock exchanges is the most popular equity investment. The stock market is very volatile, with rapid changes in share values. These fluctuations are usually related to political, social or other issues in the home country of the corporation. Equity investments are famous for high risks and potentially higher rewards. It is traditionally recommended to investors that they hold both equities and debt-based investment for better diversification of their portfolio. Debt-based investments perform differently than stocks and increase during years of large stock declines. An individual's exact allocation is dependent on the investor goals, risk preferences, and investment time horizon. When it comes to trading, it is important to understand that all trading comes with risk. Depending on your trading goals, you can choose what suits you the best. You can always tailor your trading actions to match your objectives and risk tolerance. Thank you for